Okay, let's kick started. Hello, good morning, everyone. Thanks a lot for joining this session. Today, I think we will just talk about Tesla in details. I think in the previous session, we have chat about Tesla, but I don't want to go into that details because once we get into Tesla, right, so the topic is so broad that we will spend quite some time to really just talk about this topic. So I think for today's session, we will just talk about Tesla and also EV. And I think the part that I'm most interested to find out is about the valuation, because, like ARK Invest, they came up with valuations that is, many people say very high. And then some will say actually it's still undervalued. So I think it's interesting to find out like how, Kelvin, you have done a good valuation model. So I think we will get into that details. So I think for the first part of this today's session is we'll go through Kelvin's presentation together with the valuation model, and then we'll follow up by some Q&A. But let's say if you have any questions right after the presentation, I think we can also talk about it first before we go to the Q&A. So I'll pass the mic to Kelvin, Kelvin Lew. Thanks a lot.
Okay, thank you, Bunti, and good morning, everyone. To start things off, I just want to say that I'm not a financial analyst, and I'm not trained to do any valuations on any companies. I'm just an investor like most of us. So we are all learning together. I've done quite an extensive research, if I can say so myself, on Tesla with the help of people in the community, and also through resources that is publicly available. And I've also added, maybe I can also add some opinions, mostly anecdotal and opinions, and also some information that I have compiled through the years, and also based on my experience in the industry. Okay, so if you want to take this as pure financial advice, so please don't do it. I just hope that you can always do your own research to cross-check all the facts and all the data that I will be presenting today. Okay, so just take it as an educational thing first, something to start your research and start your decision or any steps of your process to decide on investing or not. Okay, so I'll quickly go through the first part of this report. This is what I have prepared actually in July. I updated it a bit in October. It is, I just collected some of the qualitative stuff in Tesla. What I think it is important to have or to understand first, so that you can decide if this is a business or a company that you would like to invest in. So I first start with the moats, which I think most of you would be quite familiar with. I see that there is a very strong EV mind share of Tesla in the world now. As you know, that if you are talking about EVs, despite what President Biden says, Tesla is definitely leading in the brand of in the EVs, despite what some media would like to put out. Okay, so you can verify yourself. Then one of the biggest moat I see is that it has the technology lead. It is very innovative. The speed of innovation is really amazing, really fast in this company. So just a few statistics that I think strengthens or helps this factor. So recently, it has launched the fastest mass-produced vehicle. It might not be the fastest vehicle, but the mass-produced one, which means there are volumes of, it can go up to 20,000-30,000 a year, which is the Tesla Model S Plaid. It has the highest efficiency in terms of EVs. So EVs, definitely batteries is expensive. So efficiency is important to have that range that people need to travel, right, to use it, then it is safest. So all these are links to the facts lah. You can look into it. I will share this soon enough after this. Then there is also maybe something very underrated. Some people don't see this, is that the supply and manufacturing in Tesla is world leading, and I can say this because I have experience in the industry, so I know how fast they are working compared to their competitors. And also another moat, I think, is their talent, the ability to attract talent. And now they also have the largest charging infrastructure, and it's growing every week, even as we speak. Then I will look into the total addressable market of EVs. So these are a few stats. I don't want to go through all this. You can read it yourself. What I see is that there is a very large addressable market that they can address in the coming years. Some people there are some research who is very conservative. They think that EVs will not take over the ICE vehicles that fast. But I have a fairly optimistic target. I feel that it will be faster than what most people or most research analysts think. Then Tesla itself, it has a goal of 50% CAGR in production growth, up to 20 million vehicles by 2030. I personally feel it's a bit too optimistic, and I think it will taper off a bit after 2025. So I average it out to roughly about 20-30% per year CAGR, roughly like that. And the revenue growth also roughly about 30% per year. So more or less will also reach more or less will reach about, I think, if I'm not mistaken, 12 to 15 million by 2030. I'm going to a more conservative approach. I mean, I'm not in Tesla. I may not be right, but I'm just trying to, reduce the optimism lah. Sometimes, don't be too optimistic. And we'll see later. Then, however, I expect Tesla to maintain its share of EVs. So it will take roughly 17% and will reach about 11 million, 11 to 15, depending on how optimistic I am. I have bull bear case also. So roughly like that. I think it's 65% of the total vehicle volumes. EVs to take 65% of the world vehicle volume is actually very realistic, as we have seen that Norway has already more than 80% of the new cars in BEV, in battery electric vehicles and plug-in hybrids. Germany recently has just passed the threshold of total 20% of new vehicles, okay, in battery electrics, not plug-in hybrids, battery. So already 20% is growing very, very fast. Next, I think there is also potential in the energy division. It will likely capture a very large market share there. And I think that also can contribute to their revenues, although it might not be as large as the automotive revenue. So basically, some other small factors, like, is it easy to explain to a 12-year-old? Some people say this is quite important as a qualitative factor, okay? Because sometimes simplicity is quite important, so that people gets it. So Tesla is very it's very well known, right? The brand, it sells cars, it's cool, it's fast, high tech. If you know kids, if you have been around with kids nowadays from 10 years to maybe 17, 19 years old, they know this company, right? It's from my experience as well, I teach primary school students tuition as well. They know this company more than they know about Toyota and Volkswagen. The stock coverage, this may be good, may be bad, but for me, if it's well covered. You can get a lot of information easily, good or bad, right? But it may also be sometimes negative because it can be very easily affected by market sentiment. Then one of the most important thing is the key man risk, definitely the CEO factor. This is more than any other company you have seen, although it is definitely getting lesser now as the company matures. So the risk in the future, I think this will not be that big of a risk. But currently, I still see that it's a risk. Some problems that I see and challenges, maybe short term, that the ramp up of the new factories may cause the demand to move towards their competitors. Another one I didn't add here is that the risk of supplying batteries, it is getting more apparent now that to secure their battery supply, that is not as easy as it seems, especially with the different supply constraints in the world nowadays. So long-term and short-term battery is quite a big risk. Although they have their plans in place, but plans is just plans. If you do not have execution, it will not work. So we'll have to still see if they are able to execute. So regarding their new battery form factor and their new battery chemistry, it is still not visible. There are rumors that they will start limited production next year. They have just revealed to the analysts in the Deutsche Bank Investor Day, I think a few weeks ago, that they are 90% there. The last 10% is still to be done. And sometimes the last 10% will take like 90% of the time. So we don't know. We'll see. But I think they are optimistic. Then for some future markets, they still have a lot of opportunity. They have just arrived in the Southeast Asia, right, in Singapore. So even in Singapore itself, already taking the market by storm in a country where cars are super expensive. So I think they have that ability to really capture market fast if they can expand fast. So hopefully that their Berlin and Texas factory will go up soon, and they will maybe build more, maybe one more in Europe, one in India, maybe one in Indonesia or something like that, or Thailand, to help their expansion. Because if you look at like the competitors, Toyota, who builds how many vehicles a year? 10 million, something like that. They have like 60 factories. Volkswagen has 100 over factories. So they have still a lot of work to do. For the quantitative factor, I will not go into too much because I will go into the valuations in the Excel spreadsheet. So you can read this yourself. Like it's nothing much to go through. Quite boring. I'll go through the spreadsheet so that you can have a base or something to start off. You can copy the spreadsheet and do your own editing. You're free to do that. So I'll just jump straight to the spreadsheet. You can jump in anytime if you have any questions, right? If anything not clear, so that you don't miss out. So what did I start first? Late 2020, I started to do a very simple net present value valuation. So I took the financials straight from their website. I took the most important ones, right? And then I see roughly what are the trends. Okay, how are they moving forward based on their plans and what they have revealed. So you can see that they were loss-making on the bottom line, the net earnings per share. Up till 2020, they started to show at least an annual income per share. So from then on, I started to really model and put it into numbers. So you can look at the maths yourself when you copy this sheet. So I won't go it through too much because I want you to ask questions later. So I did a simple net present value which shows that what is the market cap if I discount it back to today, right? So the formula for the Google Sheets is the NPV. So I need to have the sum of all the earnings. So I use earnings instead. So it's more conservative, I would say. Some people will say use the cash flow, but I just want to be conservative, right? So then there's a discount rate as well. So for this discount rate, you have to play around as well. So here I put 10%. Some would argue it should be higher because you're actually comparing your investment with another investment with a comparable return. So if let's say you want to compare to the treasury bonds, if you put 2%, right, 1 or 2%, your present value will be very high because it is better to, you get higher returns if you invest in Tesla. But if you put a discount rate very high, that means you can say, let's say the discount rate, instead of 10%, you say, I want to get maybe 30% per year from Tesla. And then you will see that the net present value goes down. So you will feel that, no, it's not a good investment. So let's say I change this, right, to 30%. So you can see that the net present value changes to 76 billion. So you will see that this is a very bad investment. So the fair value price would be like $80, right? So just to let you know, that's why I said it's more an art than a science, right? You just need to understand how the numbers work, right? You cannot just say, oh, this YouTuber say the value will be like the share price will be 20,000 in 5 years. The other analysts say the target price is $80, right? You have to know why or how the number changes. So don't just take it at face value. Don't just say, oh, this guy says $80, this guy says $1,000, right? You have to really find out and see how they value the company. And don't forget that this is garbage in, garbage out. Okay, so you put garbage in, you get garbage numbers. Okay, so that's why I prefer to really go through the numbers. I look and see, I play around with the numbers that I put in first, and I don't just take the number at face value. Okay, and then early 2021, I refined the model a bit. I use the trading 12 months so that every quarter I can update myself. Okay, so this is the spreadsheet that shows using the trading 12 months. But I'm not very proud of this. This is just quickly change a bit. I don't recommend you to look at this. It's not, I don't feel that it's refined enough. Okay, so I don't want to talk too much about this. But what I refine further is I do a bull and bear case. So I assign some probabilities. Yes. Any questions? No. Okay. So I heard something. Never mind. So for the latest one, I did 6 cases. So the hyper bear, which is really, really bad, like black swan events. Then up to the hyper bull, which is really, really good, which is also quite unlikely to happen, but may happen. Okay, then I put a weightage, which is based on the probability here. And then I look at the fair value, and then I find a fair value. Okay, this fair value is based on the share price. Okay, just a rough idea. Okay, I'll show you the calculations behind it later. So just to quickly go through the bear and bull cases, right? I would say I talk more on the base case, and later you can ask questions why I choose this for the bear, why I choose this for the bull. So the base one means the most likely to happen, in my opinion, about 50% chance, like 50-50. So the revenue will follow the market growth, which is following the BEV growth. And they can maintain their market share, 17%. That means the total market, the total EV in 2030 will be 65 million vehicles, and they can take about 17%. They will have some energy revenues, that means the energy storage and solar. And they have a average sales price of about 48,000, which is current average sales price of all their vehicles, right? So this is, you see, it's very base case. That means there's no robo-taxi, there's no like software, there's no robots, just normal base case. Okay, I feel that it's a very high chance to come true. Okay, so maybe I'll talk a bit about the hyper bull also. Some people maybe are very, very optimistic. So if I'm very optimistic, right, if the battery electric vehicles will take like almost all of the ICE vehicles, which means about 100 million vehicles per year, and Tesla can take about 1/5 of it, 20%, then, and also their energy market share can really grow. They will go up to 350 gigawatt hours in 2030. Then they will also have SVSD revenue. They will have insurance revenue. They have robo-taxi. They have Tesla bot. Okay. And this is, I still feel it's very conservative revenues, even with all this happening. Mine is very conservative actually. Okay, I'll show you why in the later sheets. Okay. Now, if I go to the base case, I scroll to the base DCF, right? Okay. So, these are the revenues based on the base case, which means in 2030, it will get up to about 520 billion in revenue. The cost of revenue grows in line, roughly, but at a constant 30% growth here. I put revenue growth. Cost of revenue, sorry. Revenue growth 30%, sorry. Cost of revenue growth also in line, 30% here. Okay, down here. Okay, so that means this is already saying that they do not have operational efficiency, you know. They are not improving efficiency. That means they are just doing business as usual. So you can see already that sounds very conservative, right? But that's my base case. Okay. And then the operating expenditure also grows 5%. Okay. Here, every year. Then this one is a bit, then this one will have the operational efficiency here, right? But the cost of revenue, that means they don't go for like, their materials costs don't go down, their margins don't improve, gross margins don't improve. Okay, but the operating, let's say their R&D, everything also grows, but not, the cost doesn't go so high that fast. So then the operating profit will grow following here. So the operating profit at 2030 will be 110 billion. Then the interest, taxes, etc. This one is calculated. I put, so okay, so this is automatically counted. Then at the end here, I change a bit. I give it higher interest and taxes. Okay, maybe, well, I think taxes may go up as time goes on. Okay. Then the net gap profit will be counted here at this line based on the previous calculations. The shares, I give a 1% dilution every year. That means you're actually getting diluted also. But after 2025, I reduce it to 0.5%. So all this can change, you can change yourself. It's just my opinion. So the shares will grow as well. Then the EPS growth, you can see in this line, earnings per share growth, right? So it will grow up to 2030, it will be about $63 per share. Okay. So the PE multiple here, you can change yourself so that you can look at what are the possible pricing here. Okay, you can change yourself. But I don't put too much weight on this because this is just shock sendiri only. You shock because you can change that. Say, oh, what if currently the PE multiple will also be 300 in 2030, right? You put 300 here, you will get a 19,000 share, 19,000 per share price, which I don't think it makes sense, in my opinion, right? So it's just shock sendiri. But what is important is to look at the market cap, which is the value that you get as a shareholder lah. So the market cap will be calculated here, discounted back 1.02 trillion. So you see, now it's already 1 trillion, right? Then you can see, yeah, well, it makes sense to decide if you want to invest currently, isn't it? Right? So that's your own choice. Okay. This is the current this is the net present value. Sorry, again. So you discounted it back, it's about 760 billion, right? So you can make your own choice whether you should invest now. Because if you base on this calculation, right, the current fair value will be only $790 per share. So you need to make your own decision. So you think is it probable, right? But this is discount rate of 2%, you know. So which means you are only just comparing it to a 2% yielding investment. Okay. So if you think that there are potential, right, you can just change this to like 5%, right? The present value will be lower. Okay. So if you discount it to, let's say, risk-free rate of treasury bonds, I think it's 1.0%. I don't know. I can't remember. So you can see it grows a bit. Okay, so this is just the base case. Okay, so some people will say, no, this is already overvalued. Okay, like say 2%, right? Overvalued, no, I won't invest. Okay. Then you have, of course, the bull cases, right? Then you can see if their revenue growth even higher, they can go up to 900 billion in 2030, right? You can see now the current price will be 2,000 per share. So you think that, hey, now it's okay to invest, right? Now the market cap is only 1.02 trillion, but it's supposed to be 1.9 trillion in 2030 or okay, invest now, right? So it's just a lot of just numbers. You have to really understand how the numbers affect each other, and don't just take any number that someone says it will come true, right? I don't think it's a good way to move forward. So do your own research, understand how the numbers play around. So all this green color fair value price, right, I put it back in front into the bull bear scenarios. So you will see that there will be a probability calculation based on the weights of the probabilities. And currently it's about $810, which some people will say, yes, it is overvalued. Okay. So you just play around. You have to play around with this. So what I do is that I have this tool, right? Sometimes I think it makes, I see that, the base case is more probable, and then maybe bull case getting more probable. So maybe I can, like, let's say I reduce this to like 30% to if it's only growing at this, but in the bull case, right, let's say it goes up to 0.3. Okay, so now it seems fair value already $1,053, which now the current price is at $1,060, right? So you see, don't just take numbers at face value. Understand how they arrive with the number. So this is just my tool. It may be wrong, which I think very high chance of being wrong, but it also could be right. Okay, so at the end of the day, do your own research and understand the company more, take a risk, and have fun, right? So Bunti, I think I'm through with the numbers and everything. Maybe a bit too boring, too dry. I think I open the floor to more specific questions. You can, based on what I have just presented, if you want me to drill down into different cases, also why or how I come up with these numbers, ask it through the Slido or to the chat or something, and then we will elaborate further going by that way lah. I think that's make more sense, because too much numbers here. I think you should play around with it yourself first to understand how the numbers work before I make it too boring.
All right. Thanks a lot, Kelvin, for a very detailed overview of the models together with the spreadsheet. Before we go to Q&A, before we jump into Slido or me asking questions, right? I just see anyone has any questions. You can just unmute and then just ask the questions if there's any question. Okay, no questions. I will ask question first. Can you jump back to the base valuation page, Kelvin?
Yeah. This one?
Yeah, you mentioned that these are all there's a lot of assumption, right? I just want to question a couple of assumption. For example, like the revenues, right? You are putting in like 30% growth. That's the I think the previous one you are using 25%, and here you are using 30% growth. And then I just did a quick calculations. If the growth is at 25% for 10 years, I think over that 10 years period, the growth will be like 10x lah. This is the top line growth. So I just want to hear some of your reasoning, like how do you come up with this 25 or even 30%? Because we know that like let's say this year number of cars produced is around, let's say, 800,000, and then Elon's once said that he target to produce 20 millions, right, by 2030. So I think if you work up the CAGR for that, right, the CAGR, I think we will get something that is higher than 25 or 30%. And then the other second part, which is related, is also like the average selling price, right? They can sell like let's say 10, 15, 20 million cars 10 years later. But let's say if the selling price has dropped from the current level to, let's say, 25% or 30% cheaper, then it will kind of offset the number of cars that they sell when it comes to the revenues. Because to put it simply, revenue is just number of cars sold multiplied by the average selling price, right? So just want to hear your comment on with regards to this growth rate, because I think this is one of the key assumption.
Okay, yeah, Bunti, thanks for the question. Yes, the growth, what I started from is that I see what is the total addressable market. So I get a rough idea of what I think the number of cars they can sell. Then based on the average selling price of about currently 48,000, I have my very conservative case where the average selling price drops down to like 25,000 or so. So I find a middle ground now. I find a middle ground because I think inflation will come as well. So there will be also they will grow in line with the inflation or even better. So that's why like Tesla is saying that they will grow like 50% for the next few years, right? I try to like smooth it out to more a linear interpolation from 2021. They say 50%, but who knows? Maybe 2025 they will go like to only 20%, right? So I smooth it out, and then because I go at the end first. I start at like 2030, right? 520,000. 520 billion here, 520 billion revenues is based on, I think, 11 million or 10 million cars only. Okay, so that's the end point. So then I play around with these numbers, right? So even if, let's say, if I put like here 50, right? Because we definitely know that 2021 will 2021 will grow by 80% because they are doing like 900,000 cars this year, and then next year most likely will go like 1.3, 1.4 million, right? It will grow even faster, but I just interpolate lah. I mean, you can play around with these numbers. That's why I put it. I just put it linearly, or rather exponentially, based on 30% growth, a CAGR of 30%. But you can play with around. What I did is that, okay, I just tell you why I do 30% is because the end number here. I look at what percentage of growth can bring me to this end number based on the volumes I think plus multiplied by the average selling price in 2030. That is my base calculation, so that I don't just take the number from Tesla blindly because someone said that it will grow 50% every year. Because if I put 50% every year, right, this number will go like into trillions already. So I don't think that is very realistic. Okay, because there may be like more cars sold than the number of households in the world or something. So it doesn't make sense really. So I think did I answer your question, Punti?
Yeah. I think you did answer. I think that's a good response. I think my follow-up question is, in the beginning section, you mentioned that you think the EV adoption will be faster than what many people are assuming today. Do you have any like specific reason why you think that it will be faster? Because this is not like when we say there will be EV adoption, I think this one, let's say 95% of the people will agree, right? But faster than what is implied by the market or implied by the analysts, I think this is something you must have some specific reason. Please share with us.
Yeah, sure. So what I have a specific reason is that I see from the trends that people are looking at now. So from one of the trends that I look here was, if you can see on the screen, is it sharing? Yeah. So in the Deloitte market review, right, in 2020, they show this trend. Okay. So this was the previous trend up to 2019. You can see how it grows, right? And then they are expecting it to follow that trend here. So there's a drop here, and then it will slowly grow up, and the ICE vehicles will go down like this here. Okay. But I feel that they are not taking into account how quick the user will change their mindset. I think it's the same thing like the adoption of the smartphone. All the previous analysts also did not expect smartphone to go so fast. I think it will happen the same with the EVs. One thing that made me really more confident is that more and more countries are also giving incentives. So don't underestimate the power of incentives, because it will make a lot of price economics go out the window. Because once something goes cheap artificially, right, people will really adopt it quickly, and the first adopters will spread the word very, very fast. And if you follow like those YouTubers, or like Darren was also speaking about, every Tesla owner who buys a Tesla will definitely still buy a Tesla. And imagine if they can, like Christmas Day, they bring it to their hometown, their uncle see it, their uncle will want to buy it. Their family see it, their family will want to buy it, right? So don't underestimate that kind of growth. I think a lot of analysts, they only look at numbers and they try to extrapolate linearly, too linear. So it's a bit not realistic, because I look at a bit of a sentiments as well. So here they have their outlooks, right? You see, their China EV in 2030 market share is only 50%. I think that's super conservative. If you go on the ground in China, right, the government is giving so many incentives to go to EVs that 50% is just, I think, it's too conservative. If you think about it, that no new consumer or new buyer of vehicles will consider to go to ICE in the next few years, because of the difficulty of getting their number plates, the stigma of the government, right? The stigma of the public that you are driving a polluted vehicle and everything. I don't think it's only 50%. And you see here their EV global sales, right? This lime green color is 30%. 2030, you imagine 30%. I feel it's too low, 30%. Because now you see so many smaller markets growing so fast. Germany is now already 20%. Norway is 80%. Singapore is also like growing, like I think already 10-20%, right, per every quarter or something. I don't know, you look into your own numbers. Imagine a country which is going through a country which do not encourage you to own cars, right? People go for EVs instead of a normal car. And of course, if you are talking, let's say the price, right? The price may be a problem to other regions, but I think the competition will come, and then the pricing will definitely reduce and also become more affordable. Because let's say you say now like 45,000 for a car is expensive for now, but if you factor into inflation or everything, right? Maybe in the future, $35,000 will be a normal price for a small car. We don't know. Okay, but I think it's too conservative. That's my opinion. It's just too conservative. It just doesn't make sense based on what I see. Okay, you may be wrong. You may be right. I may be wrong. But it's just my feeling that it will not be just 30% globally. It will go like 60, 65% like that. My feeling. That's it. That's what I have to say.
I want to add one more point here as well. Like majority of countries right now are banning ICE cars by 2040. Like this is a ban. Like you literally cannot buy it anymore. There are other countries like Norway banning ICE cars in 2025, UK by 2030. The average person drives a car for 10 years. By 2030, you have been pretty insane to want to buy an ICE car because the resale value will be next to nothing. And also, Kelvin talked about mindsets. By 2030, if you buy an ICE car, it's as if you're smoking in front of the school. People asking you why you want to pollute the planet. Like it's the social stigma is going to be very high against ICE car by 2030. Because of how a lot of social stigma for a lot of things like smoking or other things that change over time.
Yeah, Darren, I totally agree. I mean, it can change very fast, especially when also sometimes you have that if you think that consumers are rational, right? Sometimes people buy cars, you will see the resale value. You will think that I think it happens in Malaysia very often. A lot of people want to buy Hondas and Toyotas because they know that they can sell it later at a higher price, right? Because somehow it's just the mindset. But imagine, right, if you buy a car now and in 5 years, right, the value will be zero, right? You will not be buying it anymore. So you will definitely go to EVs because EVs will be continuing to be bought. So because in the future, let's say if countries are starting to ban even the sales of new cars, the older cars can be sold, but then they will ban regions or places in the city or in some areas of environmental zones, right? You cannot drive an ICE vehicle anymore. This is already happening in Germany, even with the older cars. If you go to Germany, I think Darren has been, right. If you notice, every car has a sticker on the windshield that's green, yellow, and red. So if you are in the city, right, yeah, if you are in the city, if it's yellow, right, you cannot drive in the city anymore. No, so you can see the utility of ICE vehicles will also go down. People will not buy a car where they say, hey, I cannot reach this place, I cannot reach that place, right? So I think that will accelerate that adoption.
Actually, quite a number of all these countries that have policy to encourage EV adoptions, right? Like Norway, even China. There are many countries that are doing that, but that is to push the EV industry in the country, right? I think right now it makes sense to do so because like EV, if you just let it stand on its own, it cannot stand, right? Because of the cost and so on. So this country will just have to do something to promote them. But once the adoption level goes up to, let's say, 20, 30%, right? I think it doesn't make sense for this company to continue to do that anymore because, it will actually, the cost will be a lot higher than compared to now because now you're just supporting a small number of cars. But once the overall percentage increase to 30, 40%, it becomes much higher, right? So my question is, do you think that, let's say, right, 3 years, 5 years, I don't know when, once they pull out all this incentive or the government policy that is more EV friendly, right? And just let the entire EV sector just stand on its own. Do you think that the economic structure still works? That meaning that with the car production at that time, can they compete with ICE vehicles or not? What's your comment on this?
I think that's a good insight as well. I mean, you have to factor in that economic pricing structure. I think what the governments are doing is quite good to incentivize the industry currently. But of course, these incentives cannot go forever. But I think in the model at least works because if you see Tesla has now no subsidies anymore, right? So they are making money. So they're actually proving to the legacy automakers that it actually works without incentives. What the current government, why they are continuing is that they want to have the other legacy automakers also jump on board, so they continue the incentives, so that they can at least give competition to Tesla. Because otherwise, if Tesla grows too into a monopoly, it'll be also a problem, right? So if it goes away, right, I think the industry can stand on its own, just based on the current trends that I see, that it actually works. I mean, yes, you may buy a car which is, you say, like, yes, EV is definitely still more expensive than the ICE vehicles, but you are looking at it currently, at the current value. Because if you look into the ICE vehicles that you are currently buying, right, some of it is also not actually making money to the ICE companies. The margins are very low. But what Tesla has shown, that it's possible to make a business case out of it. So it's just now up to the legacy to really see that this is the way to go. But of course, I do acknowledge that risk, right? But I think if the trends show, right, I think it will go to EVs anyhow, due to the fact that environmental awareness is getting more important, and the newer generation is also more not so much into the vroom vroom, those kind of cars and so on.
I want to add one more point here for everyone to consider. So by next year, in 2022, Tesla is going to be likely the most profitable car company in the world. It's kind of like Apple. They sell 10-15% of phones, but 70% industry profits. And when you take away EV incentives, it actually helps rather than hurts Tesla. Elon Musk even said, please don't give us the incentives. You think about it, like, remember in my talk when we talked about Google and advertising, when companies or governments move to privacy legislation, it helps the big platforms like Google and Facebook, because they already have billions of users. The smaller ones are the ones who suffer the most. So same thing for EVs. You take away EV incentives, it's all the other car companies who are struggling to make money selling EVs, adopting the new technology, building EV factories. They're going to have a much tougher time. Whereas for Tesla, because of the technology advantage, as Kelvin mentioned, they are just so much more profitable that take away the incentives means Tesla is going to gain more market share, not less. It's something to consider.
Yeah, for Tesla, will be definitely good if the incentives go away, right? But I think it's as an investor standpoint, of course, it's the best, right, to get a monopoly. But if you're talking like industry-wide adoption, I think the government has maybe a mandate to at least accelerate the competition to help the awareness, or to help actually to do something about the environment. You can say whatever their motives are, the governments, right? But I think overall there will be a net positive to the world.
I agree.
Yeah, let's say when it comes to this question about whether they will be competitive as an industry, I think one thing that is quite important is the battery cost, right? Because you want the mass market to adopt. It's not just about whether it is ICE or it is EV, right? Sometimes it's about the cost, right? So for many users, they just decide based on cost. If the EV is cheaper, then they will just go for it, right? So my question is, have you come across any research that shows what was the progress of the battery price, whether it come down as per what was projected, and also any comment with regards to the performance of the battery?
Okay, yeah, for that I have I did not add into here, but I'm going to say numbers out of top of my head, but please verify yourself again. So there's a source, very good source, I think Benchmark Material Intelligence or something like that. So they do have the prices of the current industry in terms of battery prices. So the average industry price is, I think, about $100, $10, if I'm not mistaken, for kilowatt per kilowatt hour. So a car to have an acceptable range, right, you need about 50 kilowatt hours. So you can multiply, you get about $5,000 plus in US dollars terms for per vehicle. Some cars go 75 kilowatt hours, some go to even 100 kilowatt hours. So the battery pack or the battery price will range between 5 to 6,000 to maybe up to 11,000 per car. So that is definitely a big percentage. But if you see like as battery gets more efficient, right, you may not even need like 100 kilowatt hours per car anymore. You can just do fine with 50 kilowatt or 40 kilowatt hours, and that is without any price reduction. So that's about $5,000, $6,000 per battery. And then if you're talking about industry, right, there are definitely efforts nowadays, right, to bring down the cost. So Tesla has already talked in their battery day how they were to be doing it, but that is only on Tesla's side. But I'm very sure that the industry they are also having plans to reduce the prices. Even if you are looking at without Tesla, right, if you look 10 years back, I think 10 or 15 years back, right, the price of batteries per kilowatt hour has dropped like 90% already. 90%, it's not a small amount. So you can see that now with the trends being so clear, right, I'm fairly certain that the prices will go down to maybe like $60, $70 per kilowatt hour. So if you are looking at as a percentage of a vehicle price, right, we are currently buying a vehicle, let's say, how much was like 10, average, let me at 25, maybe 15 to $20,000 per vehicle. I mean, in US and worldwide on average. So the battery price now is taking like 25% of the whole vehicle, which is crazy, right? Very expensive. But if you can half it, right, it will go to like 15%, which I think is acceptable because considering that the lifespan, right, and you reduce a lot of maintenance costs. The upfront cost will definitely be shocking, right? But I think the efficiencies will come because if you are in the engine, if you are in current automotive industry, right, the engine itself, right, is not a simple thing to build. It's not a simple thing to build at all. There's a lot of manual labor still. If you go into a BMW factory, you go into a Volkswagen factory, right, the most employees, right, per unit of part, right, is the engine. A lot of things cannot be done automatically. So that is the cost. They have made it in such a way that they make it so efficient now, right? You think that, the engine is actually contribute not much to the cost, but actually an engine itself is not cheap. If you have changed or transplanted an engine before, it's not cheap. It's like $2,000 or $3,000 per engine. So you see, it's comparative already, to a battery, almost comparative, right? So I think the numbers will get better because even batteries nowadays are getting more automated, and that's where the cost saving comes from. Because previously a lot of batteries are still handmade. If you look into the BYD batteries, right, the blade batteries or the different form factors, right, a lot are still a lot of hand labor jobs required. But if you look at the recent Tesla 4680 batteries, right, they are building up to the cell is all automated. So that reduces the cost dramatically. Okay, so that is one part, one plan that you can reduce the cost. And then the next plan is, of course, the chemistry, how you want to improve in terms of efficiency. But that one, I don't have much insight. I'm not into that. But I think one more important thing is also the acquirement, to acquire the raw materials. That one still got a lot of cost included inside. But as time goes on, right, you do not need to mine new materials anymore because the materials in the battery can be recycled. So in the future, if you can build a new battery with like 90% of recycled materials, right, then you can imagine how much the cost will be lower, right? You do not need to get new materials from the ground anymore, so you can reduce a lot of cost. I think that's all I have.
Yeah, I think that's a good point because right now EV industry is still new, right? So there's still a lot of scaling. Just from economy of scale, they also can still reducing the cost, right? So I think for the next, let's say, a couple of years, the average cost of battery to come down. I think this is something that is fair to assume. It's just the question is how much.
Yes, if you look at engines, right, it has been refined like for 100 years already, right? So then you can see how, but the cost actually didn't go down much, for the past 100 years. They have actually, they improved the efficiency by small increments. But if you see batteries now, right, it's been being improved in very big increments. It's getting faster and faster with our technology and then with what we are doing recently. And also batteries, a lot of them now, we are still not, we do not still have like the optimum chemistry. Because you see, like in cars, right, the fuel itself is already like almost optimum already. We cannot get more out of it anymore. It's just there already. And then the improvement is just small parts like the exhaust, the how much fuel we use, how we reduce, how we use the heat, how we turbocharge and everything to make it more efficient. But battery is actually very in its infancy. Lithium ion is like, I think 30-40 years the technology, and then only the recent years it has really went into like optimizing the chemistry. So if you can like have the optimum chemistry, right, I think that will accelerate further. That means all the smaller battery factories or smaller manufacturers, right, will say, okay, let's use this chemistry, and then we ramp up, right? Because now we don't know what to use. We don't know the recipe yet. So what should we invest in? So they are all still very cautious. But I think when the day comes where they say, okay, this is the best from what we have with the minerals we have on Earth, right? And then I think it will just accelerate greatly.
Yeah, definitely looking forward to all those improvements. Yeah, actually, my last question before we jump into the Slido Q&A, right, is with regards to the profit margin, because I think one comment that I get quite frequent is that yes, Tesla is growing very fast now. From a low base, they will grow big. They can just keep on selling and increase the number of cars that they sold, right? No problem on that. But then when you compare the profit margin of Tesla versus, let's say, Toyota today, right? Actually, Toyota is not running at a very high profit margin because this entire auto business, right, doesn't command a very high profit margin. It's not like Facebook, these kind of tech companies that you can scale at almost zero cost, right? So, and then if you look at Tesla, we can say that, okay, right now, because they still haven't really ramped up, it's still like selling less than 1 million car a year, right? So still far from the ultimate goal. Hence, their profit margin today is also not that high. The questions, right? I think if we go back to your valuation model, I think the profit margin is definitely something that will impact the fair value. Because if you assume that 5 years or 10 years later, the profit margin, you put it as, let's say, 5%, or whether it could go up to 25%, right? That's like 5 times a difference in terms of their fair value. So my question is, number one is that, can we go back to your model, right? Just want to take a look at the profit margin. What profit margin are you assuming, let's say at 2030? What's the percentage? Is that percentage higher than Toyota's margin today, or lower? And if it is higher, right, what makes you think that they are able to command such a profit margin in the future? Do you want to comment on that?
Yes, sure. So what you said just now regarding their margins now is comparable. I think that is not correct. Their automotive margins are actually industry leading already. They are actually more than the competitors. If you look at the recent one, I think their gross automotive margins is about 30%. And then their bottom line is about 6 or 7, I think, if I'm not mistaken. Correct me if I'm wrong, but actually it's already quite good. Or actually it's better. In terms of, let's say 2030, so I have my numbers here. So they are about 20% automotive margins. And their bottom line is about, I don't have the numbers here. Here I think 77. Yeah. So in the mid-teens, like 10, 12%, which is what the company is expecting. Okay, but of course expecting may not be true. But I think this is quite quite probable. Okay, not definitely will happen, but quite probable because of the fact that the efficiency of the company is way more than all their competitors. So I don't think we should take like as an analogy, because some people will say that how come Toyota is selling 10 million but their valuations is like this, but Tesla is only selling like 1 million but their valuations is like this. I think we shouldn't take the analogy because they are totally different companies. Some people don't accept the fact that Tesla is not the normal ICE vehicle company. Okay, so if you appreciate that fact, right, then you will understand that why Tesla is so efficient. So the way that they work and the way the way how they become efficient is that they reduce a lot of processes in terms of approvals, part change, R&D and everything. If you have worked before, like I have with Toyota, you can see that the efficiency is at least an order of magnitude, to quote Elon Musk, and an order of magnitude greater than how people work in Tesla. Because for example, if you look into the recent, there are some anecdotal evidence recently by Joe Justice where they talked about how Tesla is so agile, not only in the software development, they actually use the software development methods to manufacture their hardware. So the way that they do that is they are doing changes, right, every few hours. And this is totally impossible in the legacy processes because they have in the previous years, like in Toyota and BMW, right, their processes are so rigorous, right, that to make a change, you will need like the next facelift, which is like 3 years if you are lucky. They will never stop production because their testing is so tedious and so expensive that they will prefer they don't change until the next change. That means they have to collect all the change and verify in the next change because of testing and other things, regulations, everything. So what Tesla does is that they make it so efficient to do changes that they can see improvements every day, and they can see they can increase their margins as time goes on way faster than previously. So they can see their feedback, they can see the numbers every quarter or every year faster than what the other legacy automakers do. And then another point on how can Tesla like command this kind of margins, right? I would say it's simply just getting more value out of the resource they have, of every cent they have. If you look at the return on invested capital of Tesla, is in the high, like 25%, which is crazy, right? I mean, you consider if you are like if you just take the number of 25%, right? If you invest $1, right, you will get back your money in 4 years, which is very efficient already, super efficient in this kind of ways if you look at it. And for this point, right, I would say it's more from my experience of working with the legacy automakers. I can see how slow things can be, how resisting to change they can be, because they have a lot of this sunken cost fallacy that they feel that, oh, I've invested like how much in this part, right? I need to make sure that I use this part in all my cars, especially like Volkswagen and Toyota, right? If they let's say they buy a part or they invest in a radar that costs $100 for their Lexus or for their Audis, right? And then they will think, okay, how can I bring this to like $60 so that I can sell it to the 1 million or 2 million other of my brands, my lower brands for 2 or 3 million vehicles. So sometimes they are just thinking in this way, They are not thinking in a way where not only cost, but I'm thinking like, like, can I reduce this part? Can I like become faster, but without waiting? There are so many small things I would like to share, but it's very hard to put a number on it. But it's just my feeling that I think that they can really they can command a way higher profit margin than the rest. And another thing is also maybe the direct-to-consumer model that Tesla has, which reduces a lot of cost, a lot of effort to bring the product straight to the consumer. I mean, like Apple, you see Apple how they can like create their own direct-to-consumer sales channel. If you look in previous years, right, in Nokia doesn't have a direct-to-consumer module, because they actually sell through their the network providers. They do like, I sell you 1 million at a certain price so that you can get your subscribers. They don't sell it directly, if you look properly, they have like authorized dealers, they have like, all those sales channels, so that yes, it may be efficient, they can plan their production better, but there are inefficiencies because the profit margin will be eaten up by middlemen and all those things. And that is inevitable in the traditional sense because of lack of data, right? Lack of like getting orders straight from the consumer. They have to, like let's say you are a dealer in Nokia phones in Malaysia, right? You have to, the market better, your consumer needs, right? So what Nokia does is that, okay, they ask the dealer how much you want to order. So they just sell it that way. So they sell at a bulk price without even knowing, without having any data more than just how many volumes per region. But in Tesla's case or in Apple's case, right, because they own the whole sales funnel, they can really improve their efficiency from the manufacturing, from their research, from their development, straight towards the consumer. So the car companies is doing the same. They have dealer networks. So the car companies don't actually know how much or how are the consumers using their car, what kind of service they need, Of course they have, but once you put in a middleman, right, information will definitely like flow slower. So, you have that kind of problems. So all these inefficiencies add up, right? So it becomes that their profit margin will be low and Tesla has a higher profit margin. So I think maybe Tesla has that kind of margin, not because of their efficiency also, but also because the inefficiency of the traditional manufacturers.
Yeah, I think that's a very, very good point. When it comes to these vertical integrations, right, I think they are like totally change the entire auto industry, right? Because they just like everything they do it themselves, and then they can capture all the small profit margin in between, right? So I think they're all following the same trend. Like you mentioned, Apple direct to consumer, then now Tesla doing the same. Even in the streaming business, last time it's also there are a lot of all these middlemen, right? So they just take out all those and just direct streaming to the consumer. I think this is not just a company. This is like sometimes it is even the industry, and there are some new technology that allow them to do so. So they really take good advantage on those new stuff. Yeah.
Yes, Punti, yes, I agree as well. And that's why you see like Tesla cars are increasing prices, right? Even without schedule, right? Just say, okay, next order will be $1,000 more, $2,000. So you see they have that freedom to increase prices. But if you have a dealer in between, right, you don't have that flexibility, because you're already having a contract. You sell a certain amount to a dealer, but you cannot, like, let's say my cost goes up, right? I cannot straight away say, oh, the next batch must be this price. It's impossible because the cars you already at the dealer, right? So you cannot do that changes so fast. So I think that's also the problem with having so many, middlemen. They have the advantages and disadvantages, but I think now with the technology we have, right, the disadvantages is more. Most people should actually, or most brand should move more towards a direct to consumer, because if you have the investment or you have the knowledge of the data of how to be agile, right, you can actually improve your margins way easier than the previous way of selling stuff to consumers.
Yeah, definitely. Some business model are superior compared to the others. Okay, I think let's move on to the Slido. We have like 16 questions here. But Kelvin, can you stop sharing your screen first so that I think it will record the correct screen sharing. I will do the screen sharing on the Slido. We will go through it together. Just give me a second. Share screen. Okay, hope you guys can see my screen. Others, let's say if you have any comment, you can also comment. Yeah. So this is not just me and Kelvin running this. You can comment. So let's start from the first one. Which we have 17 upvote. But this is very funny because just the previous last week, right, we talked about Alibaba. Then this week I specifically asked like let's just talk about Tesla and EV. Then Alibaba still come up. But let's comment on this now. So the question is this: better to buy Baba or Tesla? People keep saying Baba because it is undervalued and Tesla is overvalued. But ironically, Baba has been performing like a piece of shit. I guess, right, this question came from the same person that asked in last week's session. So any comment on this?
Okay. I don't invest in Baba, so I cannot speak for that. But I think for this person, right, I think you need to really look into what your question is really asking. Because if you say that better to buy Baba or Tesla, it's very hard to compare two companies which are totally in different sectors. But I think what you want to know is actually which one will make more money for you in terms of investment. But if that is the answer you are seeking, right, I cannot tell you the answer because I also don't know. So you have to do your own research. And for the second part, right, you say people keep saying Baba because it's undervalued and Tesla is overvalued, right? So also you have to see why is people saying it's undervalued. If it's really undervalued, right, then you should actually invest in Baba because your returns will be higher than Tesla. Because if you say Tesla is overvalued, so you have to, instead of saying people keep saying, right, what do you say, right? You have to do your own research, nobody can force you or you know like say that this is definitely going to happen. So you have to do your own study and see why is people saying that, and do you believe in that, right? And then you say ironically Baba is performing like a piece of shit. Yeah, I mean, if you are looking at with the power of hindsight, right, yes, you can say that, but will it continue being that? Will Tesla continue being overvalued? So that is the answer, or the risk that you need to take, or the leap of faith that you need to take to answer your question. And from my side, I cannot help you say that Baba is better or Tesla. But what I can do is that I shared what I have, right? What I think I feel confident of. And if you want to believe me or not, that is again your decision.
Yeah, thanks for the comment. I think when we look at the valuation that you did, Kelvin, on the DCF, that's a very good way to analyze things, right? Because like for example, you put in 10% discount rate and we get a price of, let's say, $900 on Tesla, right? So say for example, in the next 12 months, if nothing fundamentally is all the same or even improving, and let's say Tesla price drop from current $1,000 to, let's say, $500, right? So we change, so it becomes like Tesla performing like a piece of shit, right? But what it means is that with that lower price, it implies that the expected return that you get from the company is even higher. So what I try to say here is that when we look at different companies and we do comparison, we tend to see, okay, how it is performing in the past 12 months, 6 months, right? And if it drops, like what Alibaba dropped by around close to 50%, then we say it is shit, right? But it is exactly at such valuation, if you really go into details and make sure that your projection is all makes sense, and you think that, okay, it is undervalued, it could mean that the discount rate, even you put in like a 20%, is still lower than the current price, right? So to me, if adopting a forward-looking view, and you might say that now Baba is a good investment, right? But it's all come back to the valuation, come back to the DCF, and what's your view and your expectation to a specific company. So I think that is something that the DCF model can help us to make sense and piece all this together. So I think I will echo Kelvin's view is that Alibaba and Tesla I think maybe there are some overlap when it comes to their autonomous driving because Alibaba also have a unit doing that, right? But other than that, these are two completely different company, and then you should look at these companies separately and individually and make the assessment on how much you want to invest and how much to allocate also. So I think thanks for the questions. Anyone want to comment on this? If not, we will go to the next one. Should I cut loss on my Alibaba and all in on Tesla since Tesla every year stock price to the moon? I think this is very close to the first questions. Do you have anything to add?
I think it's very dangerous to say Tesla every year stock price to the moon, right? So even if no matter how optimistic I am with Tesla, we still need to take into account that sometimes shit does hit the fan. So you just need to temper a bit your expectations, right? And see what's your best move forward. It's very dangerous to say like all in on Tesla. I hope you are just joking, right? But if jokes aside, you still need to decide for yourself if it's really a good idea to put everything in one basket. You can sometimes see like YouTubers or some people on the internet saying that they are all in on Tesla, but if you look deeper, right, it's very doubtful that they are all in on Tesla. They might already have like they might already be very rich, or their day-to-day expenses is already all taken care of right before they all in. So just think a bit first what you want to do. It's always, as an investor, right, long-term investor, you are always very optimistic, okay, but we just need to be realistic sometimes.
Yeah, I want to add that I think it's not actually Tesla doesn't perform like really to the moon this year. It went to the moon last year. 2020 definitely a good year. But let's say I think sometimes people have this impression that okay, Tesla keep rallying, keep going to the moon, keep going up and up and up, right? But actually, that's also because there are quite a number of, let's say, content creators, YouTubers that talk about Tesla. So this is definitely true. If you can just watch a couple of videos and then they will keep on feeding you with more Tesla contents, right? So it gives you an impression because there's a spotlight effect to Tesla, right? But actually, if you really do more, how to say, like objectively looking at all companies and see which one perform the better, right? I think this one many people don't know. Do you know that this Ford, right? Actually, they perform much better than Tesla this year. You can go and check it out.
Yeah.
The chart it's really one of the best performing stock.
Yeah, that's why sometimes we have like very short-term memory. Sometimes you see like something is going down and you're afraid, right? If you actually look, if you don't really understand your investment, right? If you invest in the start of this year and then you see Tesla went down to like 600 or 500 in the middle of the year, you will also be asking the same. Should I cut loss on Tesla and all in on Baba? Isn't it? So that's why you have to understand the business so that you know that these short-term price movements are only just short-term. So some people will be thinking that 500 Tesla at 500 is super cheap, but some people will think that 500 of Tesla will go lower. So you depends on where you are on the chart. If from my experience, right, I have a forum thread in Lawyat forum in Malaysia, right. I started to talk about Tesla in 2019, early 2019, and then there is one guy, right. He was quite optimistic with Tesla, but then he keeps saying, "Oh, it will go down, I will buy. It will go down, I will buy." And then up to now, I don't think he has bought anything. He started from like pre-split of 400, right? He was talking in the trade already. Oh, if it goes to 350, I'll buy. Goes to 350, I'll buy. Because the thing is, he don't really understand the company, and I think don't be that kind of person. Understand it first, and then it's okay to miss out, but it's not okay to just go blindly. Because like Amazon also, I miss out on Amazon, but yeah, it's fine. I mean, you have to learn from your experience.
100% agree. Let's move on to the next one. This is the one. Should I short Tesla? Every time this question come up, why are people so interested in shorting? Not just Tesla, other companies as well. I also find it quite interesting.
Yeah, if I want to add on, I think this is maybe, I hope you are not serious. I mean, shorting is not fun. If you are bearish against that company, right, you just don't invest. Because shorting is like you are so sure that something is fundamentally bad in it, that you are willing to risk quite a bit of money on it. It may sound nice, but it's actually not nice. If you look at like Michael Burry, like the big short, right? He shorted the credit default swaps, all those things, right, during the financial crash. Well, what if the crash happens in another the crash comes late by another year? He will be now asking for donations, I think, right? Because it's a total different ball game. So it's not as fun as what people say. So just understand what is shorting first before you want to do anything.
Yeah, that's true. I think for Michael Burry, he's the one that became famous because of shorting this subprime mortgage, right? But actually, there are many hedge funds they are doing the same. It's just that they didn't get the timing correct, and they all went bust, or they went out of business because they finished burning the investor monies. So
even you see the recent one like Citadel with the Robinhood, the GM, the GameStop short, they also got burnt very. I mean, I think they also got like liquidated, right? So it's not all fun, So think before you do.
Yeah, true. If you don't believe the Tesla is a good investment, just stay away and just watch. Then I think most of us will actually adopt this mindset, right? Because there are thousands of stocks trading, unless you are owning like the ETF, but that one is out of the story, right? Let's say if you are doing stock picking, you have to let go thousands of stocks, right? Let's say if you buy 100 stocks, that's a very large number of stocks already. You're still missing like the other 9,000 stocks, right? But that is fine, totally fine. You can just stay away and invest in those companies that make you more, you're more bullish about. I think
like
let's move on.
Like YCX also say if you really bearish on the company, right, then you buy the puts or don't short buy the puts.
Yeah, that one is relatively better than shorting. Okay, let's move on. What is a good price to buy Tesla? What is the fair value? I think we went through the DCF already. You want to comment more?
Yeah, that's why I said I cannot give you a price. I cannot give you a fair value because it's all based on my assumptions. Because if my assumptions are all wrong, right, the fair value will be wrong, right? Garbage in, garbage out. So you have to do your own research and you think for yourself, what is fair. If you are lazy, then I cannot help you. But what I have already, the spreadsheet is open for everyone. You can make a copy. You cannot edit mine, but you can copy. You make your own edits. So you play around with numbers, what you think is possible, and you arrive with a number. If you think my calculations is wrong, which I'm sure it's not error-free, okay, but it's a good baseline for you to start.
Yep. On behalf of the community, thanks a lot, Kelvin, on on sharing that model. I think that is a very good starting point. Then we can input our own assumption. Okay, let's move on to this one. I think this is very interesting. Thoughts on China EV. Is NIO a better buy than Tesla since NIO sideways for the past year? In fact, we briefly talked about this question in our previous session. I think, Kelvin, you also mentioned about NIO, their battery swap technology and so on, right? Actually, I wanted to ask you, okay, since you know about NIO, I think you know more than many people's, like in terms of their business model, what is so different with the battery swapping, but you didn't invest in NIO at all, right? So my question to you is why you haven't invested, and also your comment on these questions and other EV as well, not just NIO. There are Xpeng and Li Auto and so on, right? Yeah.
Okay.
Interested to hear your view.
Yeah. So I think I start from thoughts on China EVs. I think China EVs are very competitive. They are doing very well. They are even faster than a lot of the other traditional manufacturers. But this is actually a factor of the environment in the country, the vehicle legislation and the regulations in the country, because the country is really pushing into the new energy vehicles, the 新能源, right? So the they introduce like friction to the old polluting cars so that naturally people will want to go for the new energy vehicles. You can get the license plate easier, you can register easier, you get incentives, right? And then you can you get a lot of like I think they will also get like cheaper parking, cheaper cheaper charging and all those things. A lot of good things. So this helps to accelerate the China EVs in particular, right? And the Chinese EVs are actually doing very well in China. They have not really tapped into the global market yet, but they are coming. They are definitely coming. They are going to US, they are going to Canada, they are going to Germany, they are going to Southeast Asia. So that could be something to look out for. Okay, so there are my thoughts. I've not gone into every company in China because there are, I think the last count was like 300 EV companies. You cannot believe it, right? 300 EV companies, in China, doing from bicycles, motor, lorry, bus, everything. But the largest one we hear is definitely like BYD, XPeng, NIO, right? The largest one lah. But there are a few more coming up, and I think that's what I have lah. I mean, they are doing very good cars. You will see in the coming years, they will definitely go to other markets once they can prove that their brand is of quality. Okay, especially like Geely. I think Geely is doing quite well if they want to expand quickly. But I don't have any in-depth financials or product experience with every brand, so I cannot what do you call that? I cannot comment too much on that. If the borders open, maybe we can make a trip to China and try the EVs. But let's hope that can happen. Is NIO a better buy than Tesla? I don't know. I have not done the financials or any valuations on Tesla. But for me, right, because I already own Tesla and I'm quite confident that it will be the leader, right? I don't want to bet on the second horse. I think that doesn't make sense. So for me, I would say no, NIO is not a better buy than Tesla, regardless of its valuation. So I would think that I would still stick with Tesla. But of course, you can make your own arguments, right? You can say that Tesla is overvalued, NIO is better and everything. You can do it yourself. So why do I think like NIO may be, or why do you think that NIO may be better than Tesla? I don't know what your opinion, but for me, I think that they are doing they are quite visible in terms of their branding. They are branding themselves in terms of like a totally like a lifestyle company. That means you eat NIO, you breathe NIO, you play with NIO, you buy with NIO, everything with NIO. So that's their strategy. So they have a very cult-like status in China, some for their consumers. But what is not really bringing them to the moon, right, is actually, I think, that their visibility is still very China-centric. Yeah, the way they market their products. They are also quite slow in ramping. They cannot produce high volumes that quickly. You can maybe compare this to Tesla in 2015, something like that. But NIO is in a better position than Tesla in 2015, right? But of course, it's a China company lah, so you have to understand how it works, whether their strategy is correct or not. So they are putting a lot of money into their battery technology. They also have they are using their autonomous, their NAD platform, the Neo Autonomous Driving. You have seen, you if you go to their investor day, you can also see they are putting a lot of money in that. They're investing in that. So actually, they are quite the same like what Tesla is doing, but sometimes are they doing better or are they doing worse? We don't know. I don't know. Is it the right way? I don't know. So I cannot say much for them. But look into what they are doing. They are a bit more traditional in the sense that I think they don't have that kind of vision like what Elon Musk has. There's no like higher vision. They are more like China-centric. They are more like, if you want to say, like a bit more selfish in the sense that they want to provide just the best lifestyle to their consumers instead of like the larger vision of, transitioning to a sustainable energy. So they may have their strategies going that way more than the larger grand vision of what Tesla has. Since NIO sideways for the past year, yeah, that is how the share market works sometimes, right? You don't know. Even good news come out, the price might go down. So I cannot say much about that. It's just natural. So for anything else, I think anyone wants to add in, that's all I know about NIO. Anything you want to ask, if you need more insights about NIO, I try to answer.
So I want to add one more point here. So earlier, Kelvin talked about like Tesla's larger vision. It's obviously Elon Musk's company. And much earlier in the chat, also about materials, like battery materials, even the material sciences for all the alloys in the car. One big thing that people don't think about is Tesla benefits from the material sciences and engineering from SpaceX and all the other Elon Musk companies as well. So that's why no one else can copy the giga casting, because they don't have the material sciences that SpaceX has, that Tesla now has as well. Like some of their cars are literally using space technology also. So that's something you also consider when you think about the valuation of Tesla. Like what you see isn't all that you get.
Yeah, thanks for that, Darren. Actually, I want to add on is that NIO has just also reported that they will be doing die casting, right? So they are definitely following the footsteps of Tesla, maybe a bit slower, but they are also doing, they are looking at what the competition is doing, which is good. So for Darren, maybe for information, right, the alloy for the casting is actually not that revolutionary. It can actually be done. It's actually more of the willingness to change your processes to go to a casting, and also the design that you need, the effort that you need to actually make the design work as a casting. So because I've done injection molding and die casting, the secret sauce, right, it's not the alloy. The secret sauce is actually the cooling parameters, the injection parameters, and how you design your part to actually be manufactured as a die cast, because you cannot have some like sharp corners, you cannot have undercuts, you cannot have different well lines. There are a lot of things inside which cannot be easily copied. Not the material, not to a large extent the material. Material usually you can use spectrometry and everything to guess the recipe already.
Okay. Anyone have any questions? Because I hear any comment. If not, we move on to the next one. I thought last time everyone say Tesla is just hype. Now everyone's so bullish. Any comment on this?
I think every company, every stock, there is definitely the bear and the bull. So sentiments change, analysts change. Sometimes people will of course have the power of hindsight, right? Then they will think that like last time, why is it so hype and nobody believes, but then now why is it everyone so bullish? So I think don't look too much into that. Try to make your own research, right, and see if it's really true. How is the hype coming, and why is everyone so bullish now?
Yeah, I think this one, my comment is that depending on when you are comparing to, because this last time, I don't know when you are referring. If you compare to, let's say, 2019 and before versus the 2020 where Tesla go up like, I don't know, like 6-7 times, that's definitely a huge rally in the share price, right? But that's also because of the fundamental of the business, because like just now when Kelvin is showing the financials in the past years, right, you can see that every year they were making losses. Year and year, keep burning capital because they are not profitable, right? And then only until 2020 they are profitable. And even so, many people say that, okay, actually they are profitable because they get some subsidy from the government. They are selling all the carbon credit and so on. Then that people don't believe that it's like the legit profit. And then now, as of 2021, you can see that, okay, even you take out all those carbon credit, take out all this subsidy, actually Tesla is really profitable. So usually for companies, right, if you can spot the companies that are not making money, and then everyone not seeing them to make any money, and then suddenly it just shift to make money, right? These are the companies that will actually rally very high in the share price. But the question is how to spot, right? Because usually companies that are not making money tend to continue to stay that way, you know. So it's not really easy to make this kind of bet. So just want to explain that don't just looking at the share price, because share price they are driven by sentiment, but you also need to check against the fundamental, the financial, just to know like what's happening before and now. So to make a fair assessment. So that's my point on that. Let's move on to the next one. If no other comments, please jump in anytime if you have any comments. Next question is Tesla still a good buy at 1,000 compared to the other growth companies available? So I think this is quite specific. Kelvin, you want to comment on this?
Is Tesla still a good buy at 1,000? If you want my answer, I think yes. My answer though I don't take it at face value straight away, right? Because I still buy when it's below 1,000. So I do put my money whenever possible. But it's all up to it's different, right? Because my financial situation may be different with you. So I don't know. I cannot say. For my analyst, I feel that it's still a buy based on the prices of 1,000, but you have to do yourself, right? And for if you say compared to other growth companies, I cannot compare with everyone so I don't know. I can't really answer that question. Well, if you want my answer is that yes, I still buy. But if it's good or not, well, you have to do your own research lah.
Yeah, not so easy to answer because compared to the other growth companies, which growth companies that we are referring to, right? Yeah.
Right.
Or maybe let's say whoever asking these questions, right? Let's say if you have any other growth companies that you have a names, right? Then maybe what you can do is you can plug in your assumption to Kelvin's model, and then you can also take your companies and you can do similar DCF analysis, and then you can share with us, right? We can do a session like this. We can talk about it in details, like why you are thinking on whether Tesla is better or the companies that you're looking at is better, right? Then we can do a discussion like this. The session could be recorded or non-recorded. So I think that's really up to you. If you can only share via non-recorded, then we can also do that. I think it's interesting to discuss rather than we comment on the surface. Okay, let's move on to the next one. For those who do their own calculation and prediction for Tesla future revenue, earning, and profit margin, what guidelines or assumptions do you guys use?
Yeah, I think in the valuations there, I already written some, so you can read how I get what I have, what kind of assumptions I have. But if you ask me like where do I get those information, right? It's all internet law. I don't have any like insider information. I mean, maybe Darren even better. He knows like people in Tesla or whatever, right? But I actually don't know. I don't have anyone. What I have is that I know people in BMW from my previous work. I have colleagues there. I know from their competitor point of view. I've worked inside there, so I know from the way they work. But of course, mine is a bit outdated. It's already 6 years, 7 years I've left the industry. Also, then just you have to read and understand and try to link up the information that you read. Like, for example, Bunti asked me just now, like, why am I saying like there will be a 30% profit, or why is it a 30% growth instead of 50%, right? So what I feel is that if they go 50%, it's not realistic to have up to the 2030. But what I lose is that I look at 2030, what I think is a possible target to achieve, and then I interpolate. I try to look for more realistic growth or more stable growth, you know, and then work from there lah. I think there's no right or wrong, right? It's just that you try to be less wrong lah. We try to be more realistic. We try to taper a bit our expectations, and then we also try to be a bit optimistic also sometimes, because if we are always pessimistic, what are we doing here, right? We are not going to invest, right? So use that kind of assumptions, right? And then at least you have a number. So once you have a number, then you have more of an idea, you know, as like a baseline that you can start to build your conviction. Otherwise, if you don't have numbers, right, it's always just people say, right? It's not a good way to invest.
Yeah, definitely. Let's move on. I think because now it's like 12:15 already, don't want to stretch it longer than 2 hours. We've got a couple more questions. Thoughts on Palantir seems reaching bottom and Chicken Genius investing in it.
I have no thoughts. I have no thoughts because I've read a bit of Palantir, but I've got no investment. I have no idea what is it about, so I cannot say anything.
Yeah, we can do another round with those who invested in Palantir in coming session if there are people who are willing to do the sharing. I can check it out, see. But for myself, I also not invested. But I want to comment on this part that seems reaching bottom and Chicken Genius investing in it. So I think when people usually say reaching bottom, they are looking at chart, right? So for example, you look at Palantir, it might go up and down, up and down, up and down. Then seemingly within a band, and then you can see that, okay, let's say 52-year low, it could be quite low already, just looking at chart. But just want to bear in mind that, you know, even if it is at very low point, it can still drop lower, right? If the company's share price is much higher than the fair value. I mean, all kinds of things can happen, right? It's really hard to pinpoint where the bottom is by just looking at the chart. So my advice is that at least try to understand the business fundamentals, try to understand other people's valuation, why people think that it is a good company. I mean, to do more those fundamental research rather than just looking at chart and just like based on your feeling, you look at the chart and you say already reaching bottom. If really it is already at bottom, right, then why not everyone just sell the entire portfolio and all in, right? If really that is the bottom, you're implying that there's not much risk already, but could it be? Or could it drop another 50%, right? We don't know. So we really have to base all this based on our research. Yeah, this one we will see. But today's we focus on our topics. Next question. Any concerns about the competition Tesla face, especially newer companies offering lower prices? Tesla has a premium price tag, but it limits their market segment. I think this is interesting to talk about.
Yeah, definitely concerns about competition, right? But I think what I think Tesla has that is very hard to copy is their speed of innovation, which I think I am more confident now than I was 2 years ago about the speed that they are innovating. So that is one part. So there are concerns, but not big concerns. In terms of pricing concerns, I think you are right that Tesla has a premium price tag, but if newer companies are offering lower prices, right, I think they are having compromises in terms of providing that kind of prices. I think Tesla is already market leading in terms of how they can get their pricing contracts and how they handle their business. They have more control over their prices than the newer companies. And if the newer companies, you say that they can offer low prices, I can bet, I would say, bet you a beer that is actually is an inferior product. Because I don't think either that or they are making a loss, right? So they are just trying to capture market share and really make a loss. So Tesla, the pricing do limit their market segments, definitely. But Tesla has a clear plan that they want to bring it down to the $25,000 range as well. So let's see how it goes. It may or may not happen, we don't know. But I think it's more likely to happen than not. Because I think Tesla wants to show to the other competition that $25 EV is actually possible.
I'll add another point here on top of Kelvin that when we invest in companies, we want to invest in companies that have pricing power. Like iPhone's average selling price has been going up consistently for the past decade. You don't want to invest in a company that necessarily has the lowest price. So Apple won't be worried that another phone brand has lower pricing because that doesn't impact them. And as Kelvin mentioned, even when Tesla launches a $25,000 sedan, they're not competing with like BMW and Audi. They're competing in cars that maybe cost 20, 22,000, and people are willing to pay another 3 to 5,000 more because they see extra value behind it.
Yeah, I think definitely something that is interesting to find out. So, and I think in terms of the premium or premium price tag, right? For example, if we're comparing NIO versus Tesla, I don't think they are pricing it at a premium because NIO is even more premium than Tesla, at least in China, right? So I think this one really depends on each companies and how they positions their offering. But at least for now, I think I will focus more on their cost structure. For example, like how much they are offering, they can subsidize, right? They can offer at a price that is not making much money, right? So this is up to the competition to do that, competitors. But then what's important is actually how they manage the cost structure. If they have a lower cost, then of course they can lower the price and even still make a money, right? That's how they take over the market share. So, and that's cost structure you need to understand on the scale. So I think with economy of scale, definitely something that can help them to manage the cost. So I think let's move on to the next one. To what extent do you think that the Fed tapering is going to affect Tesla next year? So I think this one I mentioned already. Kelvin, you want to comment on this?
I'm not very good in the macro level, but I think more or less it will just follow the market.
Yeah, I think this one, right? If you link these two questions, I think if really Fed start with the tapering and increase the cost of capital, right? Actually, I think it's better for Tesla because, you know, let's say competition, they want to grab market share. They might do crazy things. They might raise capital just to burn capital, right? In order to compete. But let's say with Fed tapering, it means that these companies that are doing all the nonsense cash burning, right? They might not able to do so anymore because the capital is getting more expensive. So definitely this is something that will help Tesla. It will help all companies that are already generating profits because you have less reliance on the capital market to fund your operations, right? So definitely Tesla is already there. You can see that their profit margin is already positive. But if you are holding other companies, right, say NIO, you really will want the companies to be standing on its own rather than having this negative profit margin. It will be very, very tough for companies that are not profitable when the interest rate increase. So that's the only comment I have to add. Anyone want to comment something? I hear some noise there.
I think it's very minimal, but I might be wrong. It's just that I think that Tesla is in a better position than they were before. Even if they want to raise capital, right, because of their share price, I think they can raise easily without without a lot of dilution, and also because of the Elon Musk factor, right. And then if Elon Musk wants, right, overnight, I think he can like get 5 to 10 billion easily, and that can fuel like another 4 or 5 factories overnight. So I think for Tesla would not be that impactful. It may be minimal, but not very much impacted. That's why I say just like, follow the market. If the market goes down, I think Tesla will go down, but maybe less, maybe more, I don't know. But for business wise, I don't think it will affect that much. They can easily raise capital even without I think despite of the market forces or the macro environment, they should be able to run their business in the next 4 or 5 years without any headwinds.
Yep, sounds good. Next question. How much of a threat is BYD to Tesla in China? Just now we talked about NIO in more details, but have you looked at BYD before? I think this is also something.
I've looked a bit inside. I've actually worked with BYD before during the Nokia times. So BYD was like a second-rate supplier compared to Foxconn. but they are also doing quite well. They are more on the low cost side. Their quality is a bit less. But let's talk about what their automotive division is doing. They do batteries. They have quite a large supply. They provide, I think they are second or third in batteries in the world in terms of kilowatt hours. They are, for the commercial side, they have buses and trucks, I think, in batteries. They are starting to go into the consumer side. I think the first one was the BYD. The first one, I don't know what's the name. I think the second was BYD Han. It's like a Model S, Model S segment. It's doing quite well, I think. It's not that it's not bad lah. It's not a bad car, but I don't know about the economics behind it lah. I don't know if it's like making money or is it really well received. So I cannot say much about them. If you want to invest in BYD, it's a conglomerate, right? So you cannot compare to Tesla as well. They have sectors which are making money, but if you are talking about like consumer EVs, I don't think it's much of a threat to Tesla in China unless there is a political problem lah. Let's say if Tesla is not welcome anymore in China, maybe that would be more material than the normal like their products or their technology. The threat from the political side is higher than the threat from the innovation or normal business side, in my opinion.
Yeah, I think should be fine because CCP is supporting this renewable energy. So I think BYD is their favorite son, not
Yeah.
not all the tech companies. Okay, let's move on to the next one. Any thoughts on current upside on Baba, Tencent, Tesla? My view is Baba 70% growth, Tencent 50%, and Tesla will be overvalued based on current valuation. So I think I'll comment on this quickly because this is not really a Tesla question. My question is like how do you arrive at 70% growth, right? I believe you are doing some DCF and concluded that Baba is undervalued by 70% compared to the DCF. So it still comes back to the same thing that Kelvin mentioned, right? It really depends on your valuation. When you look at the Baba DCF, how much is their fair value, right? Because let's say if you factor in like, okay, they will have more headwinds from the government, regulatory changes, and then you actually lower down the revenue growth or maybe you put in some more conservative assumption on the profit margin and so on, right? Then the fair value might actually drop, right? Or you may think that actually these are that's not the case because Alibaba, you still think that they are even stronger than before, right? So it really depends on your assessment on the companies, their current price versus the fair value, which is your fair value, right? The one that you assign for the companies. And then you can decide, right? If I'm doing a DCF, right? And I think that the companies, let's say Alibaba is like, they can rally another 70%, right? To me, that is serious undervalued, right? So you should definitely continue or even increase your stake in Alibaba if that is the case. But that is specific to each individual investor, right? Because you may be thinking 70%. Some others may be thinking that, okay, Alibaba is not investable because profit margin will drop, growth will slow down, etc., right? So it's really depends on that. But let's say if you have a DCF on Alibaba or Tencent or even Tesla, right? Feel free to share. I will just share in the group also works. I'm interested to take a look and then we can discuss on that.
Yeah, and then 70%, and then this growth is by when, right? Sometimes you say 70% by 2 years, or is it 70% by 20 years? It's also different.
Yeah, true. Yep. Let's move on. Other than Tesla EV business, do you see other areas of Tesla business contributing significantly to Tesla growth in the near future? I think this one we didn't talk that details, right? You can comment on this?
Yeah, I think if you're talking significantly, it's very hard to see because the car revenues are definitely way more important. If you want to talk, if I were to say significantly or a very big chunk, right, more than 10% or 20%, right, I would say the FSD or the robotaxi technology, right, if it really comes into fruition and if it really can like totally take over the or the driving, right, of vehicles, then that would definitely be the largest next business, or maybe even larger than the automotive. But if you say more realistically, I would say the energy business would be at least comparable to the Tesla's EV business only. So because energy storage market, addressable market, if you look at the grid balancing value, market value of grid balancing is about 1 trillion by 2030, if I'm not mistaken. 1 trillion to balance the grid. So the power storage can address that market. So if they can take like 10-20%, they are currently like 30+%, on power storage. So if they can like take 20%, right, 1 trillion will be like on annual basis is like 200 billion, right? So that's already a significant chunk. So the second one would be that one, energy storage. The rest I think is not significant. If you want to really go for the moon, right, I think the Tesla bought, but that one I think right now is science fiction.
I think that one is something that like maybe we don't see tangible stuff, let's say in the next 5 years, right? But definitely something that is interesting to see, because bot is just like the starting towards robotics, right? But we can come out, they can pivot to other stuff that is robotic related, right? But let's see.
If that one can come through, right, it takes over the labor and everything in the world, right? Then that's really like moonshot lah. But to be realistic, the battery storage, if you look, you go and do your own research, because I'm just saying from the top of my head, if the last time I read is like 1 trillion in 2030, so you can see how much they can capture. For battery storage, some people project is 100+ gigawatt hour per year at 2030. So if Tesla can take that, they will get about, can't remember the revenues. I think it's in my report, so you can look into it. That one will not be a significant chunk, but if they can really accelerate further, right, then they will be significant. That's a realistic one.
Yep, sounds good. Let's move on to the next one. Hi, may I know if I should have a higher percentage of ETF or individual stocks? I think this is a generic questions, not really asking about Tesla, but I think my comment is still the same, meaning that if you are not sure, right? Let's say you just heard about Tesla, you just watch a couple of YouTube videos and you are not sure, you don't even know like whether it's hype or whether you believe in the companies on their fundamentals and on their story, on their ambitions, right? Or any companies, right? Then you just stick with the ETF. I think the reason you go for individual stocks, let's say, at least for myself, right, is that I see some companies having a strong reason to own them. And if I invest in ETF, right, for example, let's say I buy SPY, they have like 3% into Tesla. Let's say I have 10,000 in the ETF, right? You can just do a quick calculation and say, okay, out of that 10,000, maybe actually 300 is in Tesla. So I only have $300 exposure. Is that enough or not? If I think that, okay, actually I rather to put in more, right, in certain companies, then I will just straight go into individual companies. But let's say if you don't want to monitor, you want to like just invest, just a long-term investment, you don't want to manage, you don't want to checking the prices, you don't want to follow the companies, right? Then feel free to just using an ETF and you get the average market returns, right? So I think this is something that is guaranteed. I think we discussed this in last few days. What is guaranteed is that you're getting the market average. And that market average could be a negative numbers, we don't know. But let's say over the past 2 years, right, if you just get the market average, right, that is actually not bad. And what you are getting is actually more time to do the stuff that you like, because you don't need to force yourself to do all this individual stock investing, right? If that is not something that you are interested, that is not a happy life, in my opinion. We all do this partly also because we are very passionate about companies, certain companies. Then we can invest in individual stocks. Kelvin, you want to comment on this?
No, I think you have put it well enough.
Thanks. Okay, last question already. Do you still view Tesla as a typical growth company at 1 trillion market cap and the amount of free cash flow that it can generate?
I think depends on how you define typical growth company lah. But if you want me to, what I see is that I don't think it's possible for it to like go another 10x in the next 10 years. It's definitely if it happens, I mean, definitely I'll be one of the most happiest person in the world. But I don't see 10x in the next 10 years. You would have better chances with another company because it's currently 1 trillion, right? To go to 10 trillion, well, I want to be realistic. I don't want to be always like too optimistic. But if you are saying like, the cash flow it can generate, yeah, definitely the cash flow will be there. Whether it will be reflected to its share price or its market value, that one I don't think so. If it can, I don't think it can 10x. But I'm very confident that the cash flow will be positive and growing for the next 5 to 10 years. That's definitely, I think, very, very high chance. I also think that the way that they will grow the business will definitely be way faster than what we think will happen. It will come very hard and fast. And so if you are talking in terms of that kind of growth, I think it's still a growth company. But if you're talking on whether it will reflect in the share price, 10x, I think it's not possible. I don't want to say it's impossible, but 10 trillion market cap has not been historically shown before, unless we have hyperinflation or what. But putting that aside, if you look at Apple is 3 trillion, so never say never, right? But just be realistic. Be realistic.
Yeah, definitely. Okay, I think we have go through all the questions here. We are also like more than 2 hours already. I think we will end the session soon. But before we end, right, I just want to say to Kelvin is that thank you very much for the sharing. I think your valuation model, your thesis on Tesla, right? I think that is one of the most comprehensive one that I have seen. Even more comprehensive than, let's say, Katie Wood's one, because Katie Wood's one, I think I look at it, I was like, okay, it's more like just painting a story and just make a very unrealistic numbers and just like that's how she is, right? But yours is really more towards the numbers and just have a lot more other commentary to support your assumptions. Even though you yourself say that it's all garbage in, garbage out, but I personally don't think those are garbage. I think it's a very good input. But for those who are listening, I also want to say that this is Kelvin's personal view, because we are all individual investor. We are all retail investor, right? We have a view, and then that's why we put that view into the model, and then we come to the valuation. I think everyone should do this individually. You can have your own numbers, right? Just want to be more independent, and instead of just like listening to others. I think Tesla is cheap, that kind of stories. Try to understand more on the reasoning rather than just believe on the numbers. Because today, Kelvin might say that I don't think they can 10x. Maybe he will say different things 2 years later, right? After the fundamental has changed, right? It could change for the better, right? We don't know. Because I myself, my view on Tesla has also changed quite a fair bit, let's say, compared to 2 years back. 2 years back, I'm very, very skeptical. But after looking at the improvement in their numbers, I actually changed my mind, and also my allocations also changed. So that's how I adjust my view versus like what's the fundamental, what's the facts, right? So that's something that I would encourage everyone to do it. Thanks a lot to Kelvin for the sharing. 2 hours talking, I think we really discussed a lot. Any closing statement from you? Anything that you want to share before we close this session?
Of course, yeah. Thank you to Punti as well, and to the community for listening to what I have to share. So we will just keep the discussion going. If you have any questions more specific to the models, like why did I use this number or how did I come up with this, then just feel free to message me anytime. I'll try to answer as best I can. Just the same thing again, do your own research. Try to take this as a starting point. I might be totally wrong. Again, I'm not a Excel guru. I'm not a financial analyst. I'm not a valuations expert. Okay, so I hope to learn from everyone as well. And let's hope for the better year next year, and everyone stay safe and happy investing.
Thank you so much for the closing statement. All right, then we will close the call now. I will share the video today. We'll take some time to prepare. Okay, so thanks a lot for joining, and see you in the next one. Yeah. Okay.
Bye-bye, everyone.
Thank you.
Happy holidays.
Bye-bye.
Bye.
Thanks, Kelvin.